Hello, and yes, it's Adil again after a long layoff, Mr. Intermarket Analysis, bringing you a review of the FTSE 100 for the weekend, starting, we'll have Monday show hopefully, starting from the 17th of March 2014 and onwards. Okay, so yes, apologies, it's been a long time. Fortunately, I had a car accident, suffered concussion, and I've been out ever since. I've been resting. To be honest with you, because it was quite an impact. I was going in excess of 30-40 miles an hour, and yeah, it was quite an impact. So, I mean, thank God the woman, she was okay as well. The one I had an impact with, she came out of a giveaway. They've accepted liability. So, and yes, I've just been relaxing with a bit of physio as well, because I've had really bad back ever since. Really bad back ever since. So, I've tried not to stay on the screens for too long. Just especially with regards to day trading as well. I wasn't 100% for the first 2 weeks, and then I've started to sit in front of the computer again for longer periods due to the bad back. And that's the reason why I've not really been doing much videos. So apologies for that. Hopefully, I mean, after it's been 3 weeks of physio now, so I am slightly better now. So hopefully I'll start to bring daily videos again on the FTSE and other markets. Hopefully try and help people and guide people, especially given the volatile nature of the market at present. Okay, so where are we? Yes, so I think the last time I did a video, we were at lofty heights. Okay, the markets were constantly floating higher on light volume, and basically negating any bearish fundamental, or any the bearish fundamental backdrop. So, okay, so we had the European, we had the Ukrainian sell-off, and obviously the markets then negated that and tried to obviously rally right back up again. Obviously, as you can see, we went as high as 6824, and ever since then the markets have been on a one-way traffic down. Okay, so basically the markets have sold off quite substantially, okay, ever since. So let's look at the fundamental backdrop has been strong economic data. Okay, so fundamentals have generally been strong, and certainly there's an argument there of everything being baked into the cake. That's the reason why people are selling, given the fact that the economic numbers are now being confirmed, hence the reason why there's been a rally, so on and so forth. Obviously, given the fact that we've got an efficient market hypothesis, and the stock market is usually six months in advance. Okay, so that's certainly an argument. The second argument, obviously, you've got the geopolitical crisis, and I think that's been dominating ever since, given the fact that 2/3 of all the gas reserves, etc., and the energy reserves come via Ukraine, and given the fact that the Russians are now certainly exercising their power and their might onto the world, especially Europe. They want to control it. So, and given the fact that the Europeans obviously want to maintain ties with Russia, but don't want sanctions, because that would cripple both, and it would hurt both. But the only person benefiting from that would be the Americans. So, obviously, it's in the Americans' interest to certainly put sanctions on Russia as well, given the fact the war by proxy that they've been fighting via Syria and the Middle East. So there's a lot of currents at play. It's not just as simple as obviously taking over Ukraine or the Crimean referendum vote, etc., etc. So yes, but having said that, I don't think the Russians want the war either, to be honest, given the fact that it's hurting their currency, hurting the economy, and given the fact that Mr. Putin's put a lot of effort into building or rebuilding their economy and maintaining a strong base there, economic base. So it's certainly not something that Mr. Putin wants as well. So there's a lot of again, there's a lot of hidden agendas. Okay, only thing that we can do is really assess the situation day to day on the markets. Now, given the fact that the markets are sold off quite substantially, especially the DAX, given the fact that all its exports are towards Russia and China. We are coming to we're basically stabilizing now, from my perspective. The way in which the markets are positioned going into the weekend and going into Monday, it does look as if there will be a toning down of rhetoric, hopefully, and there'll be some sort of resolution. Okay, and we'll see exactly how that plays out. But from my perspective, provided, I mean, obviously Ukraine is a wild card, provided Ukraine obviously subsides, the geopolitical tensions obviously are reduced, with both sides toning down the rhetoric, which I expect, given the fact that Mr. Kerry has obviously started toning down his rhetoric, then I expect some sort of resolution, and that should hopefully create a short squeeze in the markets going into Monday. So I'm certainly a bull. Okay, I'm certainly a bull. I've not done well on the fundamental analysis service, to be honest. This week has been very poor for the last 2 weeks. given the fact that the geopolitical crisis has been the main driver. It's not been fundamentals, it's not, even technicals have been negated to a large extent, given the fact that the FTSE obviously paced through the 200 MA, didn't respect it, and obviously has it pulled back up to the 75% fib support. So yeah, but day trading wise, the day trading this week was fantastic. Almost 400 odd points this month. Oh, well, this week, just this week alone. Sorry, not month, just this week alone. So this week in terms of day trading has been fantastic. So all of you that want to trade and want to learn as well, then come and join me. Certainly come and join me on the live analysis service, where I send my trades out in real time. I send out my analysis in real time, and I share my trades in real time. So that's something that I'd certainly encourage you to do. Okay, so come and join me. I do a 1 week trial on my live analysis service. The details are on my website. Okay, if you click on the live analysis service there, it explains it with a video how I operate. And the free trial, if you just follow the terms of the free trial, really, you just send me a text, send me a mobile number, or if you're an international subscriber, send me a message via WhatsApp, and I'll add you onto the WhatsApp group there. Okay, hopefully that should help you as well in your learning and understanding the markets. Obviously my analysis are on there, and hopefully I'll be uploading my video on there later on today. Okay, so let's have a look at the FTSE 100. So basically the economic data for the FTSE have been relatively strong, although there was one thread of information on Friday that was relatively poor. Other than that, overall it's been good. There's nothing really concerning with regards to from a fundamental backdrop, especially given Mr. Carney's forward guidance going into backward guidance, in the fact that he keeps every single time he talks, he keeps stating that interest rates won't rise, so that's certainly bullish going forward in terms of the interest rate decision, etc. And obviously some of the data has been relatively weak, hence the reason why cables pull back. Obviously a pullback in cable helps exports as well, so if you look at it from that perspective, it certainly is relatively bullish for the FTSE itself. Okay, the only concern obviously for FTSE is Ukraine, given the fact that a lot of the profits, or large amounts of the external profit, comes from emerging markets. Okay, so a lot of the companies listed on the FTSE are very vulnerable to emerging markets. That's one of the reasons why the FTSE has been very vulnerable. And obviously commodities have been whacked, given the fact that copper's been smoked, iron ore has been rogered, shall we say. Okay, and the oil price obviously has pulled back quite substantially ever since the release of the extra reserves, given the fact that Mr. Obama obviously was trying to protect himself with regards to the potential of higher oil prices, which obviously are going to hurt employment, given the fact that the economic data there in America hasn't been exactly stellar. Okay, so especially given the fact that you had QE1, QE2, QE3, which really is a failed policy. Okay, so yeah, okay, so obviously they've got their own concerns with regards to tapering. Obviously it's US dollar positive, that's another hit on commodities. So but having said that, now commodities are certainly back into support now. If you look at the commodities, you've got gold, which is higher. Obviously that's helps the minus to a large extent, but from our perspective the US dollar now is into support. Okay, and let's have a look at copper. Copper is again into support. This is a weekly chart copper, so we're into support. So if copper's into support, that obviously bodes well for the FTSE going forward. Okay, so bear that in mind. Okay, so that's really the fundamental backdrop. Now let's have a look at the technical backdrop now going into Monday's trading. Okay, so technical backdrop, the FTSE itself has retraced to 75% fib resistance, so fib support should I say, which generally the uptrend still is intact to a large extent, or ideally we'd like a short covering rally from here, which exactly we should be expecting. We're into horizontal support, we have a bottoming tail, so expect this market to rally back up to the 200 MA, probably higher. I would not be surprised if you rally back up to 6600, 6610. So that's the first target going into from Monday onwards. My target will be 6600, 6610 for Monday, and I'll explain why. Okay. Now let's have a look at the rest of the time frame. So let's have a look at the FTSE 250 quickly. Okay, just to confirm and overlap that. Okay, so go to the FTSE 250. This is something that I always do for confirmation. If you look at the daily chart is more or less the same. The bottoming tail held a 50% fib support, okay, which again is even more bullish than the FTSE itself, and the FTSE 250 has been bullish. So it's a series of higher highs and higher lows, so therefore this uptrend should resume come Monday. Okay, what's interesting is the FTSE 350. FTSE 350 obviously has held a key trend line going back, okay, from here, and has hit that perfectly. and is into its 200 MA. So it has diagonal support, which is a key pivotal trend line. It has a bottoming tail, and it's paced to 200 MA, which again is a master support level for a lot of hedge funds and institutions and retail hedge funds, etc. So this is certainly a powerful signal, given the fact that it's lower channel support, upward sloping diagonal trend line, and a 200 MA. So therefore I expect a bounce come Monday, and looking for FTSE to hit 6600 and higher. Okay, so that's just on the larger time frames. Now let's have a look at the smaller time frames. So let's go to the FTSE itself, and let's go to our smaller time frames. Okay, so let's go to a 60-minute chart now. Okay, so 60-minute chart, basically we've got horizontal support in this region here. So and obviously we have this potential expanding wedge. Really hasn't really played out again, and we've not really tested it again, have we? Really from that perspective. Okay, so only thing that we could do at the moment really is just draw your downward sloping trend line here. See if we can draw anything else at present. There's nothing really that's touching or being obedient at present. Okay, so we're in this trend line. Okay, so basically in this bearish channel. Okay, so this bearish channel certainly looks like it's coming to an end. Okay, from my perspective, all bearish channels eventually obviously reverse, and that's exactly what I'm looking at the moment. Let's go to a 60-minute chart again. We've flicked back. Okay, and we do have horizontal support around this region. Okay, so certainly watch out for a potential reversal here, and this is exactly where I'm looking to potentially go long as well come Monday. Hopefully, I mean, I already have a long anyway from my swing trading position, and I do actually believe I've got a swing long on the FTSE. I have a long, my Nasdaq long got stopped out unfortunately at 32, sorry, and my DAX long I took plus 50 around the 9050 region, and yeah, so basically that's what I'll be looking to do, obviously on the upside, and even if I wasn't in a long position, I'd certainly be looking to go long as well. The reason why is that the most powerful pattern really for the FTSE itself is on its 10-minute chart, and this is probably beautiful. This is a beautiful technical setup. So basically what you have here is you have an unfilled gap here at 665. Okay, then you have an inverted head and shoulders formation where your right shoulder obviously is being formed here. Okay, and so you've got the unfilled gap, which is a magnet here, then you've got an unfilled gap up here, which is a magnet here, which is around 6660 level. So two magnets that need for price action to be attracted towards. Okay, and then an inverted head and shoulders. So you've got the neckline, which is around the 6548 down to 6498. So you have a 50-point move from the head to the neckline. Expand that to the northern side. Okay, so you've got a target of around 6600, which your 200 MA is around the 6606 level. Your previous support equals resistance is around 6600. So abracadabra. Okay, you're looking at 6600 target. Should easily be achieved come Monday. Okay, that's basically the technical setup there. Now this setup is supported by numerous other markets. So from an intermarket analysis perspective, in order for me to confirm this pattern or confirm this move, then I do need to seek advice from its European peers. So as you can see here, the German DAX certainly held support on a daily chart, so that supports my argument of the FTSE going higher. You look at the CAC, doji candle, bottoming tail, again held support. Certainly supports the argument of the FTSE going higher. Okay, then you have the additional pair, which is Euro stocks, again held key trendline support, bottoming tail, doji looking to reverse, again supports the argument of the FTSE 100 going higher. So these are all arguments that you have, okay, as an individual or as a trader. Again, horizontal support approaching for the S&P 500, again supports the argument for the FTSE 100 to go higher. So these are all arguments that we can look at and understand. So again, we've got a downward sloping symmetrical, well, not downward symmetrical, but downward sloping contracting wedge. Okay, and again, that's generally considered a bullish pattern, given the fact that you had a high volume into the close, so the bulls were defending it quite strong. And then we're looking for a potential reversal higher here on the S&P 500, especially given the fact that it's now approaching the 200 MA, and we are into major support for the S&P. We'll be looking to move higher there. Okay, so keep an eye on that. Another argument again for the FTSE to go higher is that the semiconductors are into gap fill support. Once the market goes into a gap, it bounces, and they expect a bounce on the Nasdaq. Again, for the Nasdaq, we're in the 38% Fibbo, approaching that level. and we're looking for a potential bounce higher for the Nasdaq as well, where previous resistance equals support. Okay, the Dow Jones Transportation Index is the most interesting one. Although it has sold off at double top, but in essence you can see that's consolidation for a move higher, given the fact that oil prices have pulled back, and that's helping the Dow Transportation Index. Okay, same with Dow Jones. It looks as if into some sort of horizontal support here, and again it's certainly another argument. I mean, if you look at the American markets compared to the European markets, they haven't sold off substantially at all. So given the fact that it's a regional problem as opposed to it being a global problem, then I think a lot of the markets have sold off quite substantially. Or basically they've sold off, but they've certainly oversold, especially in Europe. Anyway, they've certainly oversold. So again, Russell 2000 gap fill support. Obviously, the market wants to continue higher, and given the fact, again, like I said, compare the sell-off from the American markets to the European markets, it's not substantial at all. So again, that supports the argument of the US markets continuing higher, and the European markets obviously playing catch up. And given the fact that they oversold quite substantially. Okay, and if you look at German DAX, you can see here we made a double bottom, bias change principles in, higher highs, higher lows. You're looking at around 9,150 in the DAX, and on the upside, if not, the 9,300 gap level will be closed as well. So watch the 9,300 gap to be closed next week on the German DAX. Okay, so that's basically how we're interpreting things here. Okay, so going into Monday's trading, I expect the markets to hopefully thrive off potential ratcheting down of tensions in Ukraine. Basically, the Ukraine situation is already baked into the cake to a large extent, and given the fact that the economic data in the Eurozone has been obviously improving on the upside, I expect a short squeeze going into next week. And again, 9,300 in the DAX gap fill. Watch out for that target. 9,150 on the DAX. Watch out for that target, and 6,600 on the FTSE. Once we get there, then obviously I'll assess the situation, see what the fundamentals are, and then I'll trade accordingly. Again, if you want to trade in real time, as you'd appreciate, this video is being made given that certain assumptions hold. So for example, if I come into on Monday's trading and the Asian markets have been hammered again overnight, China's down, bearish news flow dominates sentiment, is extremely bearish, then there's no way that I'm going to go long. I have to switch bias and go short. So it's all dependent upon the variables in the market, because we can't dictate. I can't make a video and say this is what's going to happen Monday, Tuesday, Wednesday. I'm certainly not Mystic Meg, and I don't think Mystic Meg is a trader either. So it's all relevant and dependent upon the variables and the flow of the market at the time. So obviously this forecast or this expectation is dependent upon the wild card, which is Ukraine. Obviously tensions easing, and obviously China stabilizing as well. Okay, so okay folks, so again, like I said, yeah, if you want to learn, then come on to join the live analysis service. This is something that I offer, a 1 week trial to everyone. There's details on my website. Okay, 1 week trial there. So send me an email with your mobile, and we'll get you added for Monday's trading, and hopefully you can all learn and become independent traders yourselves, and obviously exceed 200 points a week, which I've been doing for almost 8 or 9 years now. And like I said, this week was a 400 point week, which was pretty spectacular. Okay, so risk on, risk off. It's been a long time since I said that. Wax on, wax off. Goodbye now.